welcome to Seeds of Hope, Regenerative Agriculture with Elena Garides. I'm your host, and this is episode number 11. On this podcast, join me on a journey across the regenerative agriculture ecosystem through conversations with farmers, founders, investors, and changemakers as we learn what it takes to create healthier soils, communities, and food. Today, I'm excited to welcome Sarah Day Levesque, founder and managing director of Regenerative Food Systems Investment, or RFSI for short. Sarah has over 15 years of experience connecting agriculture and food system stakeholders to the resources they need to succeed. Before founding RFSI in 2018, Sarah led events and media at Acres USA and previously served as editor-in-chief at Global Ag Investing Media, where she developed strategic content for agricultural investment markets. Her work now focuses on convening those who build capital ecosystems that support regenerative agriculture, bringing together farmers, investors, and innovators. In this episode, we'll explore the evolving landscape of regenerative agriculture financing, the innovative investment models emerging in this space, and how different types of capital can work together to support farmers and build resilient food systems. From family offices taking the early risks to the development of landscape-level investment approaches, Sarah offers invaluable insights into how finance can become a powerful force for agricultural transformation. So, whether you're an investor curious about this growing space, a farmer looking to understand the financial ecosystem around regenerative practices, or simply someone interested in how money flows through our food system, there's something in this conversation for you. Before we get started, one last quick note. In the podcast, Sarah and I reference a Europe conference that RFSI is putting on in Brussels. At the time of the publishing of this episode, this conference has already passed, but check out the show notes for a link to their website to check on their next conferences in Canada and the United States. So I invite you, grab a tea and let's dig in.
Hi, Sarah. It's good to see you again. How have you been since we last spoke?
Good. Very busy. Good. Very busy. We're all leaving for Europe tomorrow and the next day for our event. So, very excited.
Right. This next week.
Yeah. Yeah. How about you? How are you?
I've been pretty busy too. I just moved to the West Coast.
That's right.
I'm in San Francisco right now and starting a new job next week. Otherwise, I would have loved to make it to the summit, but maybe I can make the US one.
Yeah. Definitely easier to go to than the Europe one for sure.
Ready to jump in?
I am. Super excited to talk.
Yeah, it's really nice to have you on the podcast. Ever since we first met in New York City at Climate New York City, I've been following RFSI, Regenerative Food Systems Investment, and your work and all the amazing things you post on LinkedIn. So I'm looking forward to bringing this conversation to our listeners.
Thank you. Awesome.
And I'd love to start there. I'd love to hear from you. So you founded RFSI, and I would love to hear what inspired you to found RFSI and bridge the gap between finance and regenerative agriculture.
Sure. I will try not to be too long-winded. I grew up in Sacramento Valley, so surrounded by agriculture, but didn't come from farm families, but it was always kind of just around where we lived, and always thought I wanted to save the world. And I realize now that just meant I wanted to have a positive impact on the world. I remember wearing a shirt that said "Save the Whales" when I was younger, even though I had no idea how to save the whales. But when I got to college, it was freshman year, and I took a class in agricultural development and was super excited by the power and impact that agriculture had and how it touched like all parts of the world. And so knew I wanted to focus on agriculture, took agronomy classes, and realized quickly that I could not be a farmer. I was not tough enough. I was not smart enough. Farmers are so smart and have to learn so much. But I did start to like the systemic and community aspects of the agriculture and food system. And so how do they work and how do they impact all the systems around them? And that's where I landed on agricultural economics. So my background is in ag economics.
Is that what you studied in college?
It is. Yeah, I have an agricultural economics master's degree and then also an international ag development master's degree. So that's kind of the two worlds coming together. Like, I'm going to go save the world. And then agriculture is going to be the way I do it. That was the intention. To add
systems thinking really embedded in that from the beginning.
Only I didn't realize it, right? When I was doing it, that whole systems thinking was just like, now in hindsight, I'm like, yeah, that was systems thinking. But yeah, I did my thesis work in Africa and realized I did not want to live that far away from my family. I have a twin sister and we don't want to be that far apart in our adult lives. So I went to work for a company in agriculture. And so I spent 10 years working in agricultural consulting, where my role really was to kind of lead research, some consulting work, programming, writing around agricultural commodity supply chains and ag investment from a very traditional sense. But then I kept having these pangs of like, but are you really changing the world like you wanted to? And so I left that company and joined a company that did specific education and programming for farmers who were farming ecologically and regeneratively. I did that about 7 years ago, and the company then gave me the freedom to start anything I wanted, which was a luxury I know many people don't have, and so I'm very appreciative of it. So I worked with that company called Acres USA for 7 years, but about a year into that work, I was watching all of these farmers that I was working with and seeing how they weren't being resourced and the systems around them weren't being resourced like I had seen in 10 years prior in my career. So there was so much capital flowing to agribusiness and commodity supply chains and food systems and ag tech. And where was all this capital? It wasn't coming to this new community of farmers I was working with. And so that is kind of where that light bulb came on, which is we know there's investors out there who are investing in food systems and agriculture. And here's this community that has so much potential for impact. So how can I play a role in shining a light on that? And that's where we decided to start Regenerative Food Systems Investment, or RFSI. I'll pause there.
So seeing that there is a lot of capital available, but that there is a gap between one community, those farmers who really need access to more capital, and the people who are giving out capital, investing, lending, etc.
Yep. Yeah.
So thinking about that, then, can you explain briefly what is RSFI and what do you do there?
Yeah, I will acknowledge it is a really long word, which is why we use the acronym RFSI. But we really were built on this idea of bringing or shining a light on the opportunity to invest in regenerative agriculture, but also the systems involved in regenerative farming and around regenerative farming. And so we started out just as like, we are going to have a convening. We're going to bring the community together. This was back in 2018, bring the community together and help shine a light on what the opportunity is. It was new at that point, especially the idea of investing in it was. And so we really kind of built what we were doing from a very diverse community that came together. And so now, 7 years in, we lead with sharing our insights and understanding of the space and holding convenings in the US and also across overseas in Europe by just trying to help and connect people across the space. So do a lot of kind of under the table connecting and seeing how we can facilitate capital to flow within the system.
Yeah, and the next conference is happening next week at February 26th.
Yes. Yeah, that's our second convening in Europe, and it's an awesome community there. Has a lot of the same energy that we have here in the US, but also some little nuanced differences between the way regenerative agriculture and food systems are growing and how they're funded. So it's really interesting to always compare kind of what's happening in the US and Europe as well.
So I want to tie this back to something that you said earlier about, okay, you saw some capital going into agribusinesses, etc., but there was a missing capital flow to farmers. So there's investing in farmers directly, which also I'm curious about what are some of the ways to support farmers financially, but also why is it important to, in addition, invest in the system around farmers too?
Yeah, that's a really interesting point. So during the transition, and I'm sure a lot of your listeners already know this, but during the transition, there can be costs to transitioning on farm systems. And so obviously it's helpful to have investment, whether it be philanthropic grants or debt financing. Those are probably the predominant ways of investing in farmers or funding farmers during transition. it's helpful for them to have access to capital, to new types of capital, as they go through that transition. So, for example, you might decide to grow trees on your property because you want to integrate trees, perennial crops. And so that costs money to buy the trees, right? You might need different equipment to bring those onto your property. And so that is a cost to the farmer, especially in the case of trees when they won't produce a crop for quite a few years. Soil testing, even something as small as soil testing, which wouldn't seem like a big burden, it could be a burden financially for farmers to try to understand their baseline of where their soil is now and where it might be later. Or the period where they're not able to get a premium for a regenerative or organic crop. So all common reasons farmers might need some assistance or investment or funding during their transition. But to your question on why investment is needed around in the system around them is if farmers decide to make this decision, take this leap to produce differently, oftentimes they are doing so with not oftentimes, almost all times, they're doing so with the eye on selling that crop after it's grown, right? And so they need markets around them to get that, to offtake the crop. And so, or the livestock, whatever it may be. And so we need markets around them to be those off takers for them, to give them a fair price. And so we have seen in the last 7 years, learning more and more about, yes, we can get farmers to transition, but if we're not investing in the infrastructure, the supply chains, the emerging brands that can serve as off takers, then we're putting a lot more risk, even more risk than they already have, onto the farmer because they're transitioning, they have a crop and they can't sell it, or they have to sell it at a price that doesn't get them a premium that they might have expected when they invested in changing their crops. So does that make sense?
Yeah. Yes, absolutely. And I think I've heard this a lot from farmers and also other people in the ecosystems, this need to develop and grow the markets for regeneratively farmed food, textiles, etc., in parallel, and how many challenges also there are in the distribution itself and this distribution system. And I'm curious because, so looking at it from the financial perspective and how capital can help in growing that system around farmers and thinking about financial innovation, you're seeing a lot coming across your table. How do you think about financial innovation in terms of, do we need new ways that we're thinking about investing? Do we need new ways that we're thinking about giving or lending to support agriculture specifically? Or can we apply similar ways that we've grown other ecosystems, for example, in the tech space?
Yeah, that's a big question. I'll go back to your kind of how do we think about innovation? And I think the first and foremost, how we think about innovation in the regenerative ag space is like, what are the enabling technologies that are going to help farmers in the system transition? And so there's investment into enabling technologies. And then the other part of the innovation is like, we can continue to apply the same financial tools to to the new solutions we're building in regenerative, or relatively new to us systems. But we might end up with some of the same results that we aren't looking for. So we don't want our investments in the system to be extractive. We want to see a different balance of shared risk, maybe, so that farmers aren't taking on all the risk. So I think that's what you're alluding to there. And so, yes, we're seeing a whole bunch of innovation kind of across the system at the farmer level, and then increasingly trying to work through like, okay, if farmers are funded, those folks that are off-taking from the farmer, how are we innovating in the way they're funded also so that it can serve both them and the farmers?
Is there an example that maybe you've come across or that comes to mind when thinking about either sharing risk with the farmers or also taking into consideration the way those other players are already funded?
Yeah, there's a couple. And one, I'll just like add a caveat, which is I think the fact that there's so much thought going into what innovations could be is innovative in itself. So like, we don't have all the solutions yet, but there's so many conversations going on that I think that is a really good sign for the future innovation in the space. And I was thinking about this because we think about finance innovation a lot, which is even some of the solutions that the space was coming up with like 4 or 5 years ago that were innovative then are actually becoming kind of common practice within like the regen mainstream, at least. And so for
an example of that?
Yeah. So like most people have heard in our space, have heard about Mad Ag and Mad Cap. And so as part of their programs, they, and many others now, they offer different loan repayment timelines for regenerative farmers or farmers that are transitioning to organic, so that there isn't that burden of full repayment during that transition period when costs are higher. You're investing in your land in the transition and you're not yet able to get that premium pricing. So structures like that, where you're changing what the repayment looks like, so the financial burden is offset a little bit or pushed down the line in the future when you should be getting a premium. That's one example, and that's one of those examples I think that has kind of resonated. Like more and more people are like, well, yeah, of course we need to do that. So it's almost like it's like a no-brainer in our space, or it should be very soon. And then another one is this idea, at a very general sense, of interest rate reductions for practice change. Fractal ag, last time I checked, that was the big part of their strategy. And that is by offering interest rate reductions for certain practices, they can incentivize practice change with conventional growers or growers that might not be regenerative yet, or even organic for that matter. And that can have large impact on large scales of land. Another interesting part about their strategy.
And a quick question there, is that because the lender perceives the risk for regenerative farming to be lower than that of conventional farming, or is it simply an incentive? Are they taking a loss on that loan?
I think it is perceived, and again, I would definitely check with the Fractal team and other folks that are doing this, but I think it is perceived that you are increasing the value of the asset by incorporating these practices. And so there is value creation and not just financial loss there.
Okay, that's interesting then. So they are incorporating not just, okay, what will the farmer farm next year? What does that equate to in revenue for the farmer? And therefore they can repay the loan and interest rate, but also they are appreciating their asset, their soil, their land through these practices.
Yeah. And isn't that like one of those things that we wish would just be part of the equation from day one, especially when you think of how much real asset investment kind of leads the space in regenerative ag investing? If you own an asset like farmland, then improving soil health is only in your best interest. And so it's why we often talk about farmers who have short-term leases or don't own their land. There's stats that are often recited that there's less incentive for them to invest in their land if they don't think they're going to be on it next year. And so there's all these different kind of structural things that we need to address if we really want soil health and regeneration to be part of that part of our food system.
So tying it back to the original question about financial innovation, you were mentioning there are some innovations that happened a few years ago that are starting to become mainstream. So it sounds like one big component is sharing risk and lining up timelines. So it takes longer for regenerative practices to have an impact on the premium that farmers can demand and lower input costs. But also, as you said, if you're leasing the land as a farmer and you're investing all this time, energy, and learning into becoming regenerative, but you might only have a 2-year lease, then there might not be enough incentive to implement those practices because you're not there potentially for the payoff.
Yeah, because you're improving the asset for somebody else to reap the benefits of.
And are you seeing a continuation of those different ways of thinking about financing farmers or systems, other players in the system that are happening now? What are some new things people are thinking about in the industry in terms of keeping on innovation in this space?
Finance innovation?
Yes.
Yeah. Well, something I'm by no means an expert. I will say I would point to Anthony Corsaro of Regen Brands or David Cooper to be the real experts in this. But looking at the other end of the spectrum, which is the other end of the value chain, and at emerging brands who are really sourcing regenerative products from farmers, there's been some like misalignment there from what we've heard from talking to these folks. And that is, these emerging brands are pulling like double or triple duty. They're trying to build a really good brand that gets regenerative, healthy food to consumers. They're trying to fundraise often for these companies so that they can survive and pay their people. And then they're also playing an important role in supporting farmers by building those market outlets for them, that offtake for them. And what we've heard is that there's now that also that misalignment on timeframes again. So like you were just pointing out that there's like this timeline thing that is a challenge that maybe we don't think about enough. And that is, are we getting funding to these brands so that they can purchase enough ingredients to and getting that funding to them ahead of time so they can make those purchases and make those purchase agreements with the regenerative farmers? And are we getting that funding to them in enough time for that all to line up? Because the farmers have to plan their crops. They have to know who they're contracting to, those things. And so there's that alignment that I know folks are working on to kind of align so that the risk isn't shifted from, say, a farmer to the regen brand, and then they're not successful and they can't in turn come back and support the farmer. I know that's very confusing, but the idea is that this is a system. And like you said in the very beginning, we need to support all these different stakeholders on the right timelines at the same time so that they can feed off of each other and benefit each other. And so as investors, we need to think about, yes, what are our financial and impact outcomes, but also can we tweak the way we get capital to these folks to make sure that they are successful or have a better chance at being successful?
And when you say investors, what type of investor are we talking about? Have you seen any type of investor trailblaze and be the first to the game? I'm curious to hear your perspective on this.
Well, first at RFSI, we work and we are intentionally have this very big tent of capital allocators, and we want to make sure that we're engaging everyone who wants to and is interested in playing in the space. So that's venture, private equity, real asset investors, philanthropy, and debt, because they all have a role to play. But I think because investment in regenerative agriculture and food is relatively nascent, what we've seen is that the family offices and the foundations, that kind of profile is who's led kind of the investment in the space. And I think that the reason for that is because when you are working with family money, you're able to take on more risk differently. You're not beholden to outside investors, so you have more flexibility in shaping what your thesis is, what risk tolerance you can take, and what your return expectations are, or how flexible those are. So it's important in the space like this because we're new. And so they also play this role of leadership. So we've seen them come out and make the investments, even though we're not sure how it's going to end up because we haven't invested in the space like this before. But they're also doing some important ground truthing, right? So proving out or learning from and sharing those findings with the rest of the space so we can bring future investment in different types of capital more prominently into the space.
So this type of investment is seen as more risky because there's not a lot of precedent. And so these family offices are coming in early and are able to take on that uncertainty. Have you seen other types of investors, let's say like real asset investors, follow suit? Where are we in that process of adoption, would you say?
I think adoption, I hope we're still way, we have a lot more to go. There's a good report done by Rockefeller and TIFS and Pollination, I believe, done in 2024 that really talks about where we are in the maturity curve of this space. And I think it's just barely after early adopters. So as a space, that's how the market's proceeding. I would say actually real asset investment was the first. Investors were the funds for real assets were the first adopters of the space. And so the folks that the family offices that invested in them first probably led. So thinking of SLM Partners, who most people in the space would know because they've been around for a very long time and they have a global portfolio and are just thought leaders. So if you haven't read their white papers, read their white papers.
I will link them in the show notes.
Yeah, thank you. So I would say, yes, they're following suit. And I would say, going back to what you just asked, which was because it's new and unproven, that's why people aren't investing in the space. Yes, I think that holds people back. And I think not just the newness, but also the complexity of investing somewhere else and then coming to agriculture in general. It's so complexly linked to so many different things. And you have to know about growing cycles and you have to know about markets. And so it is just a more complex space to be in already. And so that kind of, I think, keeps people, holds people back a little bit. And then when you throw in there, we're looking at sustainable, regenerative, organic, then it just adds another layer of complexity too. So that kind of holds people back. Definitely see an increase in investment in the space from all sides of the spectrum. Definitely philanthropy for sure. I would say Yeah, I was going to say maybe debt wasn't like following suit as much, but I think they're coming on as well.
Not to put you on the spot, but do you have any numbers that can help it put into perspective, like how much investment we're seeing or how much growth we're seeing year over year?
We keep track. So we keep track of investments we track. So that's, and it's hard because everybody has their own definition of regenerative. But by quarter, it was somewhere between 200 million to like 400 million per quarter. So under $1 billion in investment in what we tracked. And that's just on what we find. It's larger than that, but it also depends on how you define regenerative, which has not been done. We will announce, and I don't think this podcast will be out yet, but at our event next week, we'll announce a report that we are doing in partnership with Ag Funder. That will be the first report to try to share the size of 2024 investments in regenerative from a venture capital space perspective, not inclusive of philanthropy and the other parts that we do track at a smaller basis. So the answer is no. I don't have numbers for you. We will soon, and we're sharing little pieces that share a window into what investment looks like in this space. So those are on our website at rfsi.com. So you can look at by quarter where people are investing capital and in what countries and what sectors, themes, all of that.
Yes, I've read those reports, and it's quite interesting to see the trends there, or at least track the different,
it's a sample
the different types of investments.
The challenge with tracking, and I do believe in the power of data, and I do think it'd be interesting to know exactly what it is. But of course, a lot, when we say that some of these investments come from family offices, those aren't often readily shared. And so there's a lot more going on than we know about, for sure.
Right, of course. I want to also double down on what you were talking about, the challenges for investors that are trying to get into the space of agriculture investing and specifically regenerative. I think you've mentioned before in our previous conversation that you host investor workshops. Do I remember that correctly?
Good memory. We are actually hosting our very first one in coordination with our European event next week. So it's a pre-workshop, a half-day workshop where we're gathering investors who are fairly early to investing in regen ag and food. So have investing experience, but are interested, like, okay, so what's different? It's going to be part like introduction to all the different kind of entry points and how you can invest by asset class and what that means. Part learning from other folks who have invested in the space, like what is your due diligence process? How are you handling like the idea of exits in a 10-year timeline that doesn't necessarily align with the regenerative ideals? And then the second half of the workshop is really going to be workshopping through in small groups how exactly you conquer the obstacles you have to investing in the space. And so that will be really fun. But the idea really is that one, investors learn well from each other, and that we need more sharing of what has been successful and what hasn't so far, so that we can take away some of the perceived risks that might be associated with investing in the space.
Right. Wow, that sounds like a really cool workshop. And I'm curious if you can share any insights in how is due diligence different when you're looking at regenerative agriculture investments versus other types of investments?
Yeah. This is funny because I was doing some of the prep calls for that workshop in the last 24 hours. So it's kind of fresh in my mind. And I guess some of the things that I think about is first and foremost, when I think about that, I'm like, I've heard so much that due diligence or just the research period for a project is so much longer because there's so much more to try to understand and balance. But some things that we have noted that would be different in a due diligence process would include that it should be participatory, like that there might be more engagement with the farmer or the project, more learning, maybe on-site learning, which would be really good. That there's more.
And by on-site learning, you mean investors visit the farms and really get to understand practically what it is that they're investing in.
Or even a processing facility or whatever it might be, but like visit it on site and start to really see the system so that it's not just on paper. And then there should be an effort to kind of weigh it out within the system itself. So we talk a lot about systems-based investing because agriculture is such a complex system. And so thinking about the investment opportunity within the context of the bigger system and how it interplays within the system. And then something we were talking about this morning on one of my calls was this idea that how a regenerative investment fits into a portfolio might not just be framed as, I mean, I think it should be framed as a diversification strategy, like you can diversify risk in this way, but also from an impact standpoint too, like you can have more impact in your portfolio because of your investments in regenerative. So making sure that you're accounting for these in the due diligence process. And then always something to think about is time horizons and what the exits might look like, because they're not necessarily traditional exits as you might expect in traditional investing. So lots to think about. That's like just a taste, and I'm not an expert in that, but there's a lot of differences in that sense.
Yeah, but I think hitting on those different components that an investor has to consider before understanding the risk and returns of a potential investment, I think is really important. And I love what you said about really focusing on systems investing. And I'm curious, let's say if you are a venture capital investor and you're looking for that next technology, that next business that's going to help transform a part of the system. Those businesses that you might invest in obviously exist within that system and don't exist in a silo. So I'm curious, are you seeing or encouraging collaboration between different types of investors, let's say lenders and VCs and family offices and philanthropy, to where there might be a certain part of the system that investors come together and tackle together? Mm-hmm. Is that something that's happening? Is that something that's relevant?
Yeah, it's a really good question. It's, again, from our RFSI kind of big tent where we make sure that we're bringing all the different types of capital into the same room together at our convenings. That's exactly why we do it, right? With this idea, we bring them all together because we know that there's things that they can learn from each other. And, as we've been doing this for 7 years, the space as well. I'm not going to take responsibility for all of it, but we've seen an increase in this idea of how are we thinking about the capital stack, how the different types of capital work together, how one type of capital can serve at this point in time or at this part of the value chain versus another. So all of those types of capital collaborations, I think, are coming together.
And just for some of our listeners who might not be from the finance space, can you explain what a capital stack is and the different types of funding in that?
The way I was just using that was like just thinking about the different kind of asset classes. So like, are we looking at debt financing, so loans? Are we looking at venture capital, where they tend to be funding higher risk and looking for higher returns? Are we looking at private equity investments, which is taking an equity stake in things? Are we looking at philanthropy, which is more concessional and will not be looking for returns? So I think there's a place for each of those to play, both across the system and maybe even in the lifetime of a company or a startup.
Right. Like, for example, if you're developing a new technology, you might need grant money. Mm-hmm. That doesn't come with an expectation of repayment in the beginning for your first testing.
Yeah. So we talk about philanthropy, research funding from universities or from the public space, from the government or from foundations, saying like, okay, we are able to take the risk of a very new innovation that hasn't even had a pilot yet. And we can fund it. And once it gets to a certain point, then it might be time for an early stage venture capital investment to come into it, maybe. And so there's just a different role for, as they go through their life cycle, who can invest in that. At some point, they might be willing or wanting to take on debt so that they're not having to lose any more equity in their startup, that kind of a thing.
Yeah. And I'm curious, as the RFSI Europe conference is around the corner, what are some of the key topics that you're exploring in this conference?
Yeah, specific to Europe, well, we always start our events by framing the system. So talking with those who are kind of working on the transformation on the ground. So farmers, supply chain startups, and emerging brands, and even food corporates who are looking to transition as well. So that's always there. But specific to Europe, what we're seeing a lot of is landscape level investments and coordination. So you talked just now about the collaboration. Like, are you seeing any of the capital working together? We are seeing, especially in Europe and a little bit in the Midwest and in the US, this idea of how do we bring landscape level investments together, where we bring
what does that mean, landscape level
so
investments?
you're looking at a landscape instead of a project. So maybe a region like the Midwest in the US. And you're saying like who can, from the public sector, how are they involved? How are the corporate supply chains or the farmers involved? And what do the supply chains look like? And bringing diverse stakeholders together, both from the public sector, from operators on the ground to different types of capital, all of them together to try to understand how you can develop that system together. So it's a kind of systemic investing, but looking at landscape by landscape.
Yeah, so that's an important one. And that's, you've mentioned in Europe, that's one of your focuses. Is there anything else that you're also covering?
Yeah, one of the ones that's kind of near and dear. Well, there's two that I'm really excited about. One is this idea. So day one of the event is going to be all about framing the system and then where we're seeing investment now and how investors are investing in it. And by nature of where we are, a lot of it is early stage investment. So it's early stage, catalytic, not all concessionary, but that type of, for the most part, smaller scale investing. And then day two, we're going to transition to looking at like, okay, we have an opportunity to bring larger scale capital to this space. We have larger scale asset owners looking at this space at regenerative or sustainable agriculture and food. And so where is the opportunity to bring larger scale capital to the space, both by having projects that are fundable, but also by making sure that they're coming in with a regenerative mindset. And so tying that to kind of the natural capital movement that we're seeing, natural capital investing movement we're seeing, is one of the things we'll focus on. So that kind of where is the play for natural capital in regenerative agriculture and food. And then the one I was going to say is kind of near and dear to my heart is this idea of the architecture of the system. So we have all these projects and farmers that we talk about that need funding or need support in some way, shape, or form. We have capital, some of it feeding in. We have other capital looking at like, how do I get my capital to these projects? In between there, kind of like in a food supply chain, we have this architecture, infrastructure of organizations and people that help get the capital to the projects on the ground. And so we'll dig a little bit into that as well, which is like what architecture still needs to be built in the system to make sure that capital can flow to the projects. And so
what is one of the challenges of having capital flow to the projects?
Yeah. So we talked about this at last year's event, which is why we're continuing it in this year's event. But one of them is, especially as you talk about scaled capital, is you're a large scale investor. And this is just one. Regenerative agriculture would just be one piece of what is a very large portfolio of themes that you invest in. Who's going to do the due diligence to make sure you're getting that investment capital to the right projects, that's going to be at the scale that you want to invest in, and that it is like producing the returns, impact, or financial that you want? Oftentimes those larger scale investors aren't going to spend the time maybe necessary to learn the space, but they might spend the time to get to know somebody who will do that for them. So where I'm leading with that is, I think it's not a new model, this idea of having a fund manager in the regenerative space who can have the capital conversations and can funnel the capital to the right projects. That's one of the infrastructure architecture roles that I think is played. But I think there's a whole bunch of other structures and organizations that we need to make sure that we pull this off in a truly regenerative way. And so we'll dig into kind of like, who are these other organizations? Who's fostering the innovators in the space? Who's orchestrating how capital can get to not just one point in the system to farmers, but also to all the pieces around them. And I think there's a lot of work happening in the space, but definitely we need more of it.
Yeah. And I'm curious, who are those fund managers? What's the profile of someone who understands the food system enough to be able to make those capital allocation and partnerships decisions?
Yeah. I think from the most basic sense, and I don't mean to call them basic, but like SLM Partners has been around for a while. They have been doing this, and that's why I'm saying it's not new in a sense. And they have been successful at getting larger scale investment to farmlands. We see a lot of venture capital firms that are cropping up who want to to bring nature-based investments to regenerative agriculture and food systems for positive outcomes. And so we'll have more of that coming on. There's project developers, so folks that are more integrated into on-the-ground projects. Richard Falken from 1-2 Tree will be there. He won't be speaking to that topic, but he'll be talking about his experience getting funding to big projects. And then Bart Vanderzand from Fresh Ventures, who really supports startups and innovators in the space, will also speak to like how does that serve as some of the architecture we need, getting the innovators funded so that they can support the space as well.
Yeah, that's interesting. Thank you for pointing out those specific examples as well. I think listeners can look into the work that SLM Partners, for example, is doing as part of building this architecture, and also as part of building this network of experts in the space that can facilitate more capital being deployed to the right projects.
Yeah.
So another question that's come up for me is, you've mentioned bringing in larger investors. And when you're thinking about scale, what are some of the things that you're seeing that can help us get to bigger investments, get to more impactful collaborations? Is there anything there when you're thinking about scaling the regenerative adoption through capital injection that comes to mind?
Yeah. I think that like kind of connective tissue architecture that I was just talking about was a big one. Another one we're seeing, especially, well, all over, both in the US and Europe, we're seeing more folks that are kind of these, I don't know what the best word is for them, but conveners. And so in the US, you'll see them in transformational investing in food systems, who we work very closely with, TIFs, and they're convening these different stakeholders together to work through what these challenges are. So they're doing a much more hands-on approach to how we actually say, okay, here's the capital, but they only can fund here. Here's other capital they can fund here. And how do you actually bring those together? The TransCap initiative is also working on things like that. There's folks in Europe doing very similar things, like at the landscape level, like I was mentioning earlier. So I think that is a relatively new role in the space, and will continue, I think, to develop into an important role in bringing scale. We've had a conversation last year at our European event about whether the issue is, there's two things to your question. One is, do we need to bring capital at scale? Because that's scary, I think, to a lot of people. Like, do we want large scale investors? We probably want to have some say into how they come into the space so that the space is not co-opted or greenwashed. But the second question is, do we have enough capital already, and we just need to use it in different ways? And so there's two different kind of simultaneously conversations going on that. And I don't think I have a complete answer for that yet, but we'll continue to have dialogue around that. And I don't think we'll ever have complete agreement, but.
Yeah, thank you for reframing that question. I like going back to the basics and saying, do we even need capital at scale?
Yeah,
and to have the impact at scale.
Yeah, and I realized I'm the one that like kept saying scale. So it was a natural question for you to ask, and then I had to remember, you know what, like, and I think I think scale is a really interesting thing. This has probably come up in your conversations before, but there is this idea of like, what are we scaling? And so sometimes we always get that reaction, like, which is like, why do we need scale? And it's like, I'm not necessarily saying, when I say scale, it's not one kind of scale. I want to scale our impact, right? I don't think there's any doubt that we want to scale the impact that we can have with regenerative agriculture and food. And so that's number one for me, which is like, how do we bring impact at scale? Because of where we sit, RFSI, I do believe that capital has to play a role in scaling that impact. Does that also mean we're scaling the acres that are managed regeneratively? I hope so. And it also means that, that we have probably larger scale capital coming in as well, so that we can move faster at some point.
Yeah, absolutely. And scaling impact, it can look in different ways.
Mm-hmm. Right.
So going from that to, as we wrap up our conversations, for the investors who are listening to this episode, do you have any advice for investors who are seeing the opportunity in the space and wanting to learn more or get involved?
Yeah. I already mentioned this at one point, but my first would always be to visit a farm, especially a regenerative or a transitioning farm, to learn directly from the farmer. We try to offer that opportunity at our convenings. And I know there's so many ways these days to make that happen. So I would say that not only will be really inform your understanding of the space, but it also will probably, for most investors, stir something up and get them really excited about the opportunity. And then the other thing is to just talk to other folks who are investing in the space or have already invested in the space. Probably about 10 years is about as far back as folks are investing in of experience that most folks have in this space. But there's a lot we've learned since then. And so again, breaking down the risky perceptions that folks might have about the space, I think will come out of those conversations. So it's why we're having this investor convening in Europe. And I just encourage conversation.
So rethinking the way maybe risk is perceived as someone coming newly into the space by hearing from experienced investors.
Yeah. And ask them all your questions straight up. Like, I'm sure that they've been down that thought journey too already, and it could surprise you what they say about how they experienced it.
Absolutely. Is there anything else that you'd like to share with our audience today? Anything that's top of mind for you?
I guess one thing I might share, and this was something we talked about in our pre-call, so I think was interesting, which is what key changes would we like to see in the system to scale regenerative? And again, we just talked about scale, but just to expand regenerative agriculture. And there's two things. And one is this idea of true cost accounting, which I'm kind of truly shocked is not more prevalent in our system already. But this idea of accounting for the true costs and the true value of the way we do agriculture and food. And the traditional way of measuring things has always been from even in business and policy and investment has been through this financial lens and the direct cost through a financial lens. And so I would love to see more people saying, how can we actually account for the indirect costs and the indirect benefits to our system?
For example, healthcare costs, environmental costs, et cetera.
Of course. Yeah. So like Rockefeller did that report within the last couple of years that measured the true cost of the U.S. food system. And it was like $2 trillion more than what we actually counted as, because when they actually accounted for health and environmental expenditures. And so, that's just that one health sector. And so how can we start using that mindset, at least, where we're looking beyond just financial costs and financial values of things? So
and that the benefits being also nutritional density and health, again, on the other side of the coin. So where would that cost be attributed to? I guess that's a big question, but that's, I think, also an important part of the conversation. Yeah. So who carries that cost?
You mean right now in the current system?
Yeah. So in the current system, consumers who get sick from the food might carry some of the healthcare costs, insurers.
Yeah. And we do as taxpayers. And then the cost isn't just the financial costs, but it's the health costs, right? Like our life expectancy is shorter, like our chronic disease has exploded, and all of those can be attributed back to our health and food system tied in some way. And there's so many people working on that right now to tie it back to it. So I think it'll continue to get clearer, but gosh, I wish it would happen faster.
Yes, I hear you on that, especially as someone who eats food every single day.
Right.
So one of the things you mentioned that you see as critical to change, one of the key changes that you see is critical for the whole system is really looking at the cost accurately. And then you said there was a second thing that you've been thinking about.
Yeah, I think for the system, for regenerative to continue to expand, we have to expand market demand for regenerative. And I say that because it's such a hot topic right now. We like to say that the economic benefits of transitioning on the farm and, the reduction in input costs will help the farmer margins and it will help them. That will be incentive enough. And maybe that will be the case, but I still constantly hear from farmers that we need a market outlet for our product. We've made the investment to switch. I need a market to sell my product to. And then you have the middleman saying, well, I've purchased the product from the farmer, but I don't have the consumers necessarily purchasing it. And so it's just one of those systemic issues where we could just get more of that pull factor at the end of the value chain, then I think that we would be able to expand so much faster. And I think one of the key components to that is continuing to find effective ways to communicate the value of regenerative. And by that, I don't even mean that we have to use the word regenerative, but so even if we don't use the value of regenerative, how are we conveying that food that is sourced from regenerative farmers, for example, has a value to farmers who grow it, has a value to food corporates who need to be pulling it through their supply chains, to investors, to consumers. If we can convey that value, then we'll have so much more pull through for the products themselves, the crops, but also for capital to want to flow as well. So that's my wish list.
Well, I hope your wish comes true, and not just hope, but I know a lot of people are working on that. I think sharing your story here and through the conference and bringing together people is a big part of also communicating the value of regenerative to the different stakeholders, in this case, investors, for example.
Right.
And I think if everybody that listened to this podcast and that listened to other podcasts told 5 other people in their lives to learn more and educate themselves about the value of regenerative agriculture. And I think the other component to that is also getting to a space where the price point is accessible to the mainstream.
Yeah.
I think those 2 key components will help adoption. And one of the other people I'm interviewing soon is Mary Purdy, who is a nutritionist, and I think that the health component will be a big pull too.
Yeah.
Because not everybody cares about the environment or farmers, but everybody cares about their health.
We'll talk quite a bit about that in Europe. We have a few sessions on that. Eric Smith from Audacious will be with us, and another health professional from the UK. And I think that's it. It's like if we can get the benefits that regenerative brings to the person, the individual, so like human health, even convenience, if we can get it to that point, and again, address price point, perhaps, like those things I think will help with that consumer level demand for sure, and improve the costs we have in our food system, I hope, as well.
Yeah, absolutely. And hopefully we can spend less on prescription drugs and more on local, delicious, nutritious food.
100%.
So thank you, Sarah, for this enlightening conversation. We covered so much ground here today, and I'm really excited to share this with everyone. Also, I wish I could be there in Brussels next week, but I wish you all the best with the conference. And I can't wait to hear about the insights that you and the team gathers from those few days of convening.
I'll be happy to share them. Thank you so much for having me. This was fun.
Thank you. Bye, Sarah.
Bye.
Thank you for listening to Seeds of Hope. Our wonderful theme music is composed by Dane Myers. If you enjoyed the show, please follow us on Spotify, Apple Podcasts, or YouTube so you never miss an episode. Share it with a friend who might find it inspiring. And if you're loving the podcast, we'd be grateful if you could leave a rating and review on Spotify, YouTube, or Apple Podcast. It really helps others discover us. See you next time, and thanks again.